Hi, everybody. Thank you for tuning in to this week's show, this week's episode. I have my good friend Joe from World Financial with me today. Joe, go ahead and introduce yourself to the people, please.
How you doing, guys? Thanks so much for tuning in. So, just basically, my name is Joe Martinez. I'm with World Financial Group, which is part of Transamerica, which is owned by Aegon, that's in the Netherlands. And I come from a family of four. We grew up in East LA. My family migrated from Mexico to achieve the American dream. Okay. And the other day, you know what, James, the other day a friend of mine actually gave me a good concept where she said, did you ever heard of the Canadian dream? Okay. Or the Italian dream? Or the, Mexican dream? Like, you never hear about that. Right. It's always the American dream. Right. So I guess my parents bought into that concept and they decided to leave their family, their friends, their culture, the food, everything they knew to be able to have a better life. So they brought us here to the United States. Okay. And I think I figured that, like most families, when they come to this country to have a better life than they could have had in their own country, right? It really is a factor if you have people here that are going to be able to teach you the culture and how things are being done here. Correct. So they had to learn all that stuff. So when we landed in East LA, there wasn't really anybody that could really support my parents. Therefore, our upbringing was just whatever ethics they had from their parents. Right. Respect, morals, go to school, have good grades, to be able to have a good job, to be able to, so you don't have to work as hard as we did. Correct. And that's the kind of upbringing that I had, when, coming from immigrant parents, pretty much. Good. Mm-hmm. And that's helped and molded you to the person that you are today. We're going to get a little bit more into. Yeah. Yeah. That's a good thing. Shout out to your parents. Good job. Yep. How long have you been in the business, and why did you choose this particular financial industry? Okay, so it's going to be 5 years coming up this March. Oh, wow, okay. Yeah, 5 March. Right. I've been doing everything. I did car sales. I did real estate at one point. Okay, I didn't know that. Okay. Yeah, back when the market crashed, right? But the reason why I got into this industry was because I actually found out that I come from a long lineage of individuals that revolutionized the financial services industry by bringing a new concept and new ideas to it. Okay. It all started with Art Williams, who founded A.L. Williams back in the day, who he actually turned out to have more than 200,000 plus agents throughout the United States. Oh, wow. Yeah, he was huge. He eventually came across a gentleman named Hubert Humphrey. Okay. Hubert Humphrey came across a gentleman by the name of Rich Tholley. And Rich Tholley came across a gentleman that a lot of you viewers might know him, and I'm sure you might know him, Mr. Max Out himself, Ed Milet. Okay, yeah. And then Ed Milet came across another gentleman named Guillermo Haro, which is my personal business coach and mentor. Okay. So these gentlemen were passing down generation of wealth, of knowledge, to be able to have a correction in society with correcting them and educating them so they could be financially savvy. Because like I said, I mentioned, I was raised in East LA where median income combined was about, $35,000, $40,000 a year. Right. And nobody came knocking on my doors to be able to teach my parents about financial concepts and strategies. Right. So I figured, okay, now that I'm an adult, I'm going to be for other families what my family needed back in the day. Right. So you're going to, I want to say right that wrong, because it's not necessarily wrong. I think sometimes it's just a lack of knowledge. Sometimes we just don't know. And specifically different cultures, different neighborhoods, different communities, we just don't know. Yeah. So that's part of why you got into this part of the financial business. And when I'm saying financial business, give them a little bit as to what you do exactly. Yeah, so basically what we do is we're going to have a very basic education to these families by sharing with them what is going to potentially take their income from here to here. Okay. And how do we do that? Right. Well, one, we're going to teach them how to get out of debt. Okay. That's key right there. Right? Right. Do you think that most families right now in society, do you think that they're in debt or out of debt? Definitely in debt, especially around the holidays. We get more in debt because of the fact that we want to help our family. Yeah, absolutely. So we're going to be able to teach them how to settle on that debt by reducing the balance, reducing the interest rate, and reducing their monthly payment. Okay. After we do that, we're going to be able to take a look at their income protection, because a lot of families out there, they don't have any life insurance going on for themselves, or they have insufficient life insurance. That's why you see most of the time on weekends, people with banners like car wash, or you see a GoFundMe on Facebook, and that's one of the reasons why I want you to come in, because that financial aspect is very important. And we'd rather spend, let's just say in a month's time, getting a latte or Jamba Juice or Chick-fil-A or even McDonald's for the 99-cent menu. You can spend $30, sometimes $60, depending on how many children you have, when that can be going to your financial
benefit to have life insurance so your family aren't having a GoFundMe and a car wash in a shopping center somewhere.
Yeah.
Yeah.
And one of the things I've come across, James, is that these families, they just don't have any life insurance because they've never been educated in how it works.
Got it.
So a lot of them have the misconception that it's too expensive, or
Right.
I don't know if the insurance company's going to pay off or whatever.
Right.
So we're going to be able to tell them exactly how it works, the ins, the outs, the good things and not so good things about each policy, whether term or permanent.
Right.
And we're going to be able to custom tailor to their goals and their needs and whatever they want to accomplish.
Okay.
Other than that, if they don't die prematurely, those breadwinners, mom and dad, when they're going to reach retirement age.
Right.
So we take a look at what they got going on for that, because the last thing we want is for these fathers and mothers to be able to have to keep on working
Right.
after the age of 60.
Right. Tell the people really quickly, just on average, I know life insurance depends on how healthy you are, if you smoke, you don't smoke, but on average, what would a life, and I know you have the term, and what was the other word you mentioned?
Permanent.
Term and permanent insurances, but on average, between the two, what would be the average monthly payment for, let's just say, a funeral service? Let's just say we want them to cover $100,000 plus give the children some money, so let's say a $500,000 policy.
For, let's just say, for a 35-year-old, it could be as low as $30 a month.
$30 a month. You
So
spend
for-
that in one trip by yourself to a restaurant.
Yeah.
Or
So
a
for-
fast food place.
If you think about it, if it's, let's just say it's $30 a month.
Okay.
How many days are in there in the month?
30 days.
So 30 and 30 is one.
Right.
So for $1 a day,
Yeah, pretty much.
you could protect your family for $500,000.
So let's say if you're 45, 50.
Then it goes up a little bit more. It's
Okay.
somewhere in their 50s,
All right. So
Yeah.
let's say what, 60, 70 bucks?
about $60, $70.
Even at
somewhere.
that, if you take, well, my son, he's 18 now.
Okay.
Him and I go to eat. On average, let's just say we go to Cane's. If we go to Cane's, we're spending 25 bucks off top.
Yep.
And let's just say we did that once a week, which sometimes we do if I don't feel like cooking. That's $100 a month.
Yep.
So that's my insurance policy. If I just decide to cook at home, that whenever God sees fit to take me away, he's going to be covered. His sister will be covered, and they don't have to worry about a real estate car wash.
Yep.
To raise money for my casket.
That's actually one of the reasons why I got life insurance, because I have my significant other that the last thing I want is for her to do some car wash or
Right.
some fundraiser or
Right.
GoFundMe account.
And
where-
you're in the business.
Yeah,
Right?
and then I'm in the business, right? Like, how does that work?
Right, exactly. We're doing a car wash for the financial man. Like, what the hell happened? That's not good. But I'm glad you said. I'm glad we cleared that up, because the importance of life insurance is just like car insurance. Your car gets hit, you want to get it fixed. You don't have to pay for it. You pass away, which is inevitable for all of us. Whenever our time is, you want your family to be taken care of.
That's right.
And that's key. So I'm glad you brought that up. How do you bring value to your clients? So you may have State Farm, Farmers, all these different companies that give life insurance and do these financial advice that you give. What separates you from them?
Well, very good question. So, because I'm in World Financial Group, I have access to over 100 companies out there that I'm going to be able to share with them the products and services that they offer.
Okay.
For example, I'm not sure if I could say brands or anything.
Yeah,
but,
go ahead.
companies like Transamerica, Nationwide, you know the jingle, right?
Right.
Pacific Life, Voya Financial, John Hancock.
You have access to all those
I have
companies.
access to all of them. People that have some sort of prior illness, like a tumor, diabetes, lupus, or anything like that.
Okay.
I'm able to still shop around to find a company that's going to be able to offer them any protection.
Got it.
On top of that, we're going to be able to take a look at everything they have, their debt needs,
Okay.
their mortgages, and
Right.
everything, to be able to see how much insurance they need. And if they're already covered, then that's fine.
Right.
Then we're in a position where we're going to be able to share with them some tax advantage products.
Okay.
And then depending on the risk tolerance of the client or their desired rate of return, then we can make recommendations for those purposes.
So it's not just life insurance. You give them a complete package.
Yeah, we could-
Whereas some of these other companies, one, they're stuck to just what they can do within their network. You are a lot broader in order to help someone that probably couldn't get something from one of the bigger companies. You can help them out.
Absolutely,
Okay,
because
wonderful.
most of these families, I'll put it to you this way, James. Our our niche clientele, we call it the macho market.
Okay.
So macho is an acronym.
Right.
So M is for married,
Okay.
people that are married. A is for above the age of 25 and above.
Okay.
C is for children that are still minors. H is for homeowners.
Okay.
Which nowadays, rents, this
Yeah.
is like a mortgage.
Damn near. It's crazy.
So we kind of make an exception.
Right.
And then obviously they have an occupation. So if these families fall within this criteria, they're going to be able to value what we do.
Right.
And we're going to be able to have a conversation with them about their life, their money, and their future.
Right.
And if we were to have a conversation about their life, their money, and their future, then those are the people that I want to be able to help out, me and obviously my colleagues at the office.
Right.
To be able to take them from here to here when it comes down to their finances.
Okay.
And sometimes, unfortunately, it's already too late.
Right.
So really what we're looking for is two type of people. Either for individuals who are looking for us.
Right.
Like, you ever heard of somebody that says, man, I got to protect my income, or
Right.
I got this money, I want to see what I could do with this money.
Exactly.
I want to invest it for my future. And they don't even know where to go.
Right.
And so we're looking for those individuals.
Right.
And then the second individual we're looking for is people that have never heard of us.
Okay.
Because you're going to find out that these people that have never heard of us, often those are the most emotional sit downs that I have.
Okay.
Because they start literally having tears in their eyes that they realize it's already too late, because they're already either too old, or they're sick, or they just lost everything.
Right.
Because they didn't have the proper guidance.
Wow. Well, we're hoping with this video and your guidance and the information that you're giving to the viewers that they will have that.
Yeah.
We can catch them in time, whether it be from 25 to 65 or 75, and we can give them some kind of insight as to what their financial needs can be done in order to grow.
Yeah,
So that'll be
absolutely.
good. So, all right, with that being said, what kind of challenges have you faced since becoming an entrepreneur? Because we know entrepreneurship is not easy. And the reason why I ask that is because I want to always give insight to anyone who's watching from another person's perspective, that they can be inspired as well.
Man, there's so many challenges when you become an entrepreneur. But
Tell me about it, yeah.
But I think the number one, and I'm not sure if you went through this too, but is rejection.
Right.
Getting used to rejection.
Yeah, as a real estate agent, we get it all the time, especially
right?
when we make calls and door knock.
Yep.
Yeah.
So I had to learn how to build a thick skin to be able to have that just bounce off of me.
Right.
But the most powerful rejection that I had to learn how to get over was rejection from my own family and friends.
Oh, wow.
Because
That's
it's funny,
the toughest one.
James, that when you go into business for yourself,
Right.
and let's just say you post on your social media
Right.
account, oh, guess what, guys? I just opened up my own business, a restaurant. I became a realtor.
Right.
I'm doing insurance and investments. Anything.
A marketing company, whatever the
Right.
case may be, right.
Maybe you'll get a couple of likes,
Right.
a couple of comments, and that's it.
Right.
But the minute you post, hey guys, I got a new job and I'm so excited about it, you get over 100 likes
Right.
and 100 comments,
Right.
because people are more used to seeing people just going to go another job.
That's correct.
But when you become independent, self-employed or anything, it's very difficult for you to find support, and that's when you're actually going to realize who's actually on your corner.
That's true. Because self-employed is a lot more difficult. And I think we've just been so programmed to, let's say you got a job at Merrill Lynch or Chase. They're like, oh, yes, because it's a big corporation.
Yeah.
But we don't, because a lot of people don't do it themselves, or they don't see themselves being able to do it, they don't think that you can do it.
Exactly.
So it's that mindset that we have to break, and I'm glad you're breaking that mold.
Yeah.
Yeah, so that's good.
So that was I think that would be the biggest challenge I had. Luckily, I stayed close to my leadership,
Okay.
who were able to be there for me when I was getting this rejection.
Right.
And I think that's key. If you don't have someone to go to tell them, like, hey, I'm going through this.
Right.
And these are people that are close to me.
Right.
If you don't have that person to mentor you, to coach you, that, hey, it's part of the process because now you're an entrepreneur, welcome to the business.
Right, exactly.
Then you're going to quickly quit.
Right.
Because it just affected you so much.
Wow. Well, I'm glad you gave that information
Yeah.
to them. So, what are some key things you've learned that empower, the key things that you've learned that can empower our viewers? Let's
Okay.
just say, and we'll get a combination, a balance between life and the financial business.
Okay. So I guess there's 5 things
Okay.
that would be
Key.
for
Right.
either life and business.
Right.
I think they go hand in hand.
Okay.
Number 1 is that you have to have strength of character.
Right.
So if you lie, if you cheat, then you're not going to make it in life or in business.
Period. Right.
Right? So you got to have strength of character. You have to be a man or a woman of your word, right?
Right.
So that's number 1.
Okay.
Number 2, you have to have teamwork in the household. If you're married, if you have a significant other, and that person is not on your corner, forget it.
Right. Yeah,
And then
makes
sometimes
sense.
a lot of people, what they do, James, is they're like, okay, babe, I'm gonna go in business I'm gonna open up this business.
Right.
And they typically do, okay, you do your thing.
Yeah.
And I'll
Now
keep
do
on doing
mine.
my
Right.
thing.
Exactly.
There's no us.
Right.
And because there's no us, when you're out there in the field so late at night,
Right.
or you're just not keeping up with the household,
Right,
and it's
right.
nice, not tidy anymore, then that's when the issues start coming.
Or if it doesn't work out, well, that was your thing.
Yeah.
And that's terrible because it's like, no, this is us. Like, and if it's successful, we did it. Like, no. We have to work on this together in order for this to work. That's the tough part. But yeah, go ahead.
So you have to have that. Even if you
Right.
have kids, James, you have to involve your kids.
Absolutely
Right? Number 3, you have to have mentorship.
makes a difference.
So first and foremost, you have to have the willingness to be mentored.
Right.
Because if you don't have that willingness, then you're gonna try to make it on your own. But if you do have a mentor, then the question is, how coachable are you?
Right.
So if you're coachable to the speed of instruction, then you're not gonna repeat the same mistakes that everybody else did.
Right.
Right? Now on top of that, if you are coachable, then you're gonna be able to speed up your success.
Right.
Right?
On top.
Another thing that's key is for you to have a will to win.
Okay.
So number 4, the will to win.
Right.
So day in, day out,
Right.
what's going to be your why and your reason why you're going to get out there and,
Right.
and try to make it happen,
Right.
right? A lot of people are going to tell you, well, my why for my kids or my why.
Right.
Well, okay, Froggy.
Classic line, right.
All right. So then tomorrow when you don't find a babysitter, you got to make sure you still show up,
That's right.
right?
No excuses.
Because if you had a job, you're still going to show up whether you
Right.
get a babysitter or not. But this is going to be for your business. So what's your will to win? Besides, how bad do you want it?
Right. That's the question.
Right?
Right.
And then number 5 is going to be clearly defined goals.
Okay.
Because since we were born, James, we were kind of implanted with 2 things. One, procrastination. Right? Like that's why we always say tomorrow,
Right. We'll get it
Monday,
done. Right. Give me a couple hours.
or like just recently, it's like, oh, starting the new year.
Right.
Right? And number 2, we tend to drift.
Right.
To drift back to our old ways, our old habits. Think about it. How many people got their gym membership this new year?
Right.
And here we are a couple of weeks down in the year, and how many people already fell off?
Yeah.
And how many people were still going to remain in February and March?
That's right.
We tend to drift. So if you don't have your goals defined, we always recommend to have at least 10 personal goals,
Right.
10 business goals, and 10 financial goals. If you
Okay.
don't have a clear written plan for your personal life, for your own career,
Right.
or your finances, then there's no progress.
How
So-
you even make it? You got to write it down. I just had a guest on, Deborah Galley from First American Title, and she was talking about that. How people always talk about your goals. Don't just write them down and put them in a drawer. You have to see them. Even there's another who was a motivation speaker, Danny Morrell. I think I've heard him a couple of times saying that you have them in front of you when you wake up. I think Gary Vee said it.
Yeah.
Max Maxwell. What is the other guy's name? There's a couple other people, but you have them when you wake up in your car at your desk. That way you can see them and focus on them every day. Because if you're seeing something, just like a song, even if you don't like a song, you hear it enough, you're gonna start like, why the hell am I singing this song?
Yeah.
Because it's repetitive, and that's the key to getting your mind made up on what your goals are and what you want to do.
Absolutely.
So you're 100%
Couldn't agree more.
correct.
So
Yeah.
if you have those 5 things, whether in life, any area of your life,
Right.
then you should be good.
Okay. Good. Well, my next question to go on with that one is, on a financial standpoint, what tips can you share with the viewers? So, let me make this actually a 2-part question.
Okay.
First question is, if a viewer has insurance and wants to contact you, can you look at that insurance policy they already have just to see if it's good, if it's worth it, and if you can do better? That's the first question. Then my second question is, what can you give someone right now who's watching that can make a change today or tomorrow in order to become a lot more financial savvy?
Okay. So to answer the first one is, yes, we can take a look at
Okay.
what they got going on.
All right.
Not only in life insurance, but again,
Overall.
and overall,
The overall
debt,
perspective, okay.
for the retirement. A lot of people also too, when they leave their job, they had an employer-sponsored retirement program there,
Okay.
and they go somewhere else, and
Right.
they tend to leave that there.
Ah.
So if they have anything old from previous jobs, we could take a look at it, so we could roll it over
Right.
into an individual retirement account, so they can have it for their own.
Ah, okay.
But if you have an insurance policy, it doesn't matter if it's through a term policy or a permanent policy, an old policy that your parents had.
Right.
We could take a look at it. Much the same way, like a lot of people today, they have the latest smartphone.
Right.
Who has a flip phone?
Right. No, I think anybody if you ever see somebody with a flip phone, they're doing something wrong. Like
Yeah.
they're a criminal because that flip
That's a
phone.
burner.
Yeah, that's a burner. That's an analog phone. They probably have about 5 of them. So yeah, you're right.
So I mean, you're gonna update stuff.
Right,
So
exactly.
maybe the cover, now they're homeowners.
Right.
So their insurance needs changed.
Right.
Now they have kids, or maybe they got divorced now. So we could take a look at that.
Okay, good.
And then to answer the second question was,
What financial advice can you
Oh.
give to the viewers if they want to do something starting today
Yeah.
or tomorrow? What can they do?
man, apply the wealth formula.
Okay.
I guess the wealth formula is going to be your money. If you're going to put your money over time, then you got to add or subtract the rate of return you're getting, right? And then you got to subtract inflation,
Right.
and subtract taxation.
Okay.
So if you're going to do any investment, then you got to take a look at that stuff. But most importantly, James, they got to learn about compounding interest.
Okay.
I think it was Albert Einstein who made it famous because he said, those who understand it earn it.
Right.
Those who don't pay it.
Right.
And the best way to learn about, just to give you something tangible for your viewers, is, for example, the rule of 72.
Okay.
Which is, if you take the interest you're earning and you divide it into 72,
okay,
it'll tell you how many years it's going to take for your money to double.
Oh, wow.
So a lot of, like, for example, I in my bank, if I put them into savings account, they give me a 0.00 pathetic, no, I'm sorry.
Right. Right.
A 0.002%, right?
Right.
So if I divide 0.002% to 72, it's going to take me more than
Forever.
8,000 years.
Yeah, you wouldn't be here. Right.
So it depends on where you're putting your money. If you do that math, then you're going to do it. That's why you see right now over the holidays, these creditors and lenders, they lended massive amount of money because they know that they're charging clients, 25%, 30%, whatever it is.
I've even heard when the holidays come around, people who regularly couldn't get credit cards, they still extend it and go over to give it to them because they know they'll charge it up.
Yep.
Right. Wow.
So if you apply those two concepts, either the wealth formula or the rule of 72, you're going to be able to see if your money's actually working for you, or you're actually doing the wrong way, which the majority of the population, that's what they're doing.
Okay. Okay. I have a question. As a realtor, so this year I want to get my broker's license.
Okay.
Not I want to, excuse me. I am going to get my broker's. And one thing I've always wanted to do to bring value, and I probably shouldn't say this on camera because some other brokers are going to take it, but I want to say it anyway. One thing I want to offer when I do my boutique brokerage is I want to, my agents, when they close transactions, I want them to have life insurance taken out. That's part of their deductions from their commission. And 2, can a real estate agent have a 401k?
Technically, I mean, it's a very gray area because they're independent contractors.
Right.
And typically a 401k is an employee.
Ah, okay. Well, I'm glad you're answering
right?
that. Okay.
It's designed for employees.
Right.
So can we do it? Absolutely.
Gotcha.
But I don't think it's going to be the best fit for a realtor.
What would be a good fit for a realtor? Or a mortgage lender, someone self-employed, car dealer, whatever the case may be. Selling t-shirts, they just say, I want to do something as far as saving.
One of the things that I've shared with other realtors is, for example, you make a good commission.
Right.
If you make a really decent commission, you could put money away into an annuity and just leave it there.
Ah, annuity, okay.
So basically what you're doing is you're letting the insurance company borrow your money. Instead of the bank, the insurance company.
Got it.
So some of them have a contract, 5, 7, 10 years.
Okay.
But as long as you put in your money there, it's guaranteed that whatever you put in, at the end of the worst case scenario, at the end, you're going to walk out with the same money.
Got it.
So there's no losses.
Right.
But you're going to be able to gain over time, which is a lot better than in the bank.
Okay.
Other than that, the other thing that I'm sharing with people that are especially independent contractors is going to be what's called an index universal life insurance policy.
Got it. Okay.
Which is a permanent life insurance policy that has cash accumulation tied to it, which is indexed.
Right.
So we know that if it's fixed, it's going to grow at a fixed rate.
Correct.
If it's variable, like a 401k, it goes up and down.
It's like a mortgage.
Right?
Right.
But if it's indexed, then there's a floor of 0%, and then depending on how you structure it, there could be a 15% cap or even a 25% cap, depending on the company.
Right.
So at least you're going to be able to have what's like an escalator effect instead of an elevator effect.
Right.
Where you're going to be able to participate in the gains and never the losses. So imagine that you're a realtor at the age of 40, and you put money towards an index universal life. You're going to have a death benefit. So you guys are always out and about, commuting, showing properties, doing open houses, and I've heard some crazy stuff in the news where like you gotta be with
on your P's and Q's, especially for women. There, especially with this whole sex trafficking thing going on, and it's major. For females, males too, but females as well.
But if something were to happen, especially just in the commute, then your family would be protected. Right. They get a death benefit. But over time, let's just say now you're in your golden years. All the money that accumulated in the cash value, you can start taking distributions with tax advantage.
Okay.
And or if you never took the money out, then both the permanent death benefit with the cash value goes to the beneficiaries, also tax advantage.
Gotcha.
So those two things would be the thing that would be best for someone that does not have any employer-sponsored retirement program.
Got it.
That they could self-fund themselves with protecting their income with zero losses, and be able to have accumulation with tax advantages at the end.
How long would they need to keep their money in there?
For most IULs, Index Universal Lives, 10 to 15 years, there's a surrender charge. And then for annuities, it depends on the contract. Some of them are 5 years, Some of them are 7 or 10 years.
That's not bad.
So not too bad.
Yeah,
Again,
not
you're in
bad
your
at all.
40s. Remember, you want this on the long run.
Right.
And this is more meant for not as a retirement program.
Right.
It's not. It's because it's not.
Exactly.
It's more to just supplement your income in the future when
Right.
you most need it.
Gotcha.
Because again, imagine you're just chasing the deal,
Right.
or you're chasing the next paycheck or commission check, and you don't put money away for the future.
Right.
Kind of like the story with the what was it, the ant and the grasshopper?
Okay.
Remember that the grasshopper
Right.
never packed for winter?
Yeah.
And then they were starving?
Exactly.
Kind of the same
Yeah,
concept.
the ants are already prepared and
Yep.
getting ready. Yeah. Got
Yep.
you. Okay. So, what's your financial message to those thinking about taking the next step, and what advice would you give to our viewers as we close out?
Oh man, go into business for yourself, guys.
Right.
There's nothing better than to be your own boss.
Right.
If you were to do, like for example, it's a new year
Right.
and it's a new decade. So the question is it a new you or the same old you?
Right. Very good question.
And most important to see, okay, if it's going to be a new you, then might as well go into business for yourself, because if not, you're going to keep on working to build somebody else's business and,
Right.
and dream, right? So if you are going to go into business for yourself, then consider 4 things. Number 1, do you love it?
Right.
Does it resonate with what you are,
Right.
with what you believe in,
How you
right?
feel about
Because
it.
if you love it, then you're not working at
Yeah,
it,
absolutely.
right?
You gotta have passion about it.
So make sure that it resonates with you. Number 2, make sure there's a profit.
Okay.
Make sure that there's enough margin for you to make a profit, not too long from today,
Right.
or from when you start, because I know people that they go into business and they never see a profit because they go out of business,
Right.
or it takes too long for them to see a profit. So make sure that there's enough profit. Number 3, that there's a market for it.
There's a need for
Make sure that there's not one of those, you remember those fidgets?
it. Right.
It was like this
In and
new
out,
thing,
right.
and now they're gone.
Right. Exactly.
So make sure that there's going to be
Something long-term.
Yeah, a
Right.
continuous market for what you do, either a product or service or whatever you do. That there's a market. And number 4, that there's some sort of equity or stock option in that business.
Right.
Because again, the last thing you want is for you to be able to not step away from it and you walk away with nothing.
Absolutely.
Make sure you're able to build something that, at the end of the day, hey, I want to sell, Mr. Company, I want to sell my book of business back to you.
Right.
Or, hey, my business is worth this much, cash me out on that.
Right.
Because it's worth, you build something.
Right.
Versus a job, you quit and you want to give your cubicle back, and they're going to be like,
they'll just get rid of you. They're not taking
get
that
rid of
back.
you.
Right.
As a matter of fact, let me see if you're not taking anything from
Right.
here.
Right. Exactly. This is all ours. Yeah.
So that, and then I guess also the final message would be, there's a book out there called The Cash Flow Quadrant by Robert Kiyosaki.
Okay.
The cash
That's
flow,
the same guy who wrote Rich Dad Poor Dad.
exactly.
Got you. Okay.
So
people
he
know.
talks about the 4 ways for you to make income
Okay.
as an employee, self-employed, business owner, and investor.
Okay.
And he breaks it down in detail.
Okay.
And then if something resonates with you from that book, then make accordingly.
There you go. There you go. Well, I hope you guys enjoyed this time. Thank you guys for tuning in again. Thank you, Joe, for
No
coming
problem.
through, man. And
Thank you for
talking
having me.
to us. Yeah, no, definitely. We're gonna have you on a lot more. We have to figure out something we can do weekly, because outside of this, we just want to be able to give people the financial advice, like you talked about in the beginning when you came over and you didn't have what you needed. We want to give people that.
Okay.
And one of the best ways to do it is through social media platforms and the internet. They can just look at their phone, they have a question, they feel a certain type of way, and they get inspiration and guidance, and that's what helps us to build the next generation and next generation. Just like you talked about, the people helping the next
Yep.
person, the next person, and that's what it's all about. So
That's
thank
what it's
you
all
again.
about. No
Absolutely.
problem. Thank you.
All right. Thank you guys for watching. We'll see you next week.